What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today we're going to do macro technical analysis on the stock market and try to decide what a stock market correction would look like and how we'll know that a stock market correction is here. So first up, let's take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, so we are looking at a weekly chart of the SPX. So remember that every candlestick you're looking at is one entire week's worth of price action. And you can very clearly see on the SPX that we are starting to pull back from this high here, and we've now had two red candlesticks in a row. So anytime you start to see the market softening like this, where you start to sell off and you're getting consecutive red weeks, you need to always look at the possibility that you could be heading for a stock market correction. So right now, from the previous all-time high down to where we were at our lowest for the week, we are definitely around the pullback range of a full 5%. Now, a stock market correction is typically going to be 10 to 15%. So we're still in that just a pullback territory until we start breaking through more critical support. So by far the most critical support level on SPX right now is right around 4,500. If we start breaking below 4,500, almost immediately I would start getting a lot more defensive that we're more than likely going to see that full-blown correction. You could see that our support trend line gives us a little more flexibility, which is right around 44.78. So you could really decide which level you want to pay attention to the most. But either way, it's right around 44.78 to about 4,500. If we do start breaking below those critical support levels, we're more than likely going to see the full 10 to 15% correction. Now, I do have my Elliott wave count on here, and you can clearly see that it does look like we completed out 5 waves. And anytime you finish out 5 waves in Elliott wave, you are due for a corrective move. So it would not be surprising if right now we finally see that stock market correction, because we went the whole entire year without a full-blown correction. We had those 3 to 5% pullbacks, and then we were back to new all-time highs. And you usually will get at least one stock market correction a year, even though there's been about 14 years where we did not have that full-blown correction. So there's still plenty of time left in the year 2021 to get that correction, but that doesn't guarantee that we have to get one. That's why I always stay objective, and that's why I always give you a critical level to pay attention to. So on SPX, I would watch that level right around 44.78 to about 4,500. And if we start breaking below that, we're more than likely coming down to the weekly 50 EMA, which is right around 42.31 currently. If we continue lower than that, we could go down to 41.58 and possibly even 39.76. So you really need to remain a lot more cautious if we start breaking below these support levels. Remember, this is macro technical analysis, so we're talking about multi-week moves here, and we're not talking about something that's just going to happen in a couple of days. Remember, in every single correction and even every single bear market, you're always going to have counter trend moves. So don't be surprised if we bounce all the way back up to about 46.60 or even higher, and then still continue lower to finish out this correction. Every time you're in a correction, there's always going to be volatile swings in both directions, and you can definitely see that volatility with the VIX currently sitting above 30. So don't rule out the possibility that we're still in a stock market correction if we bounce and get a lower high and then continue lower and still take out those support levels. Those support levels that I'm giving you are the support levels you need to pay attention to, because if we break those at any point, we're more than likely going to get this next leg lower and see SPX possibly in the 43 to 4200s. That would be completely normal price action, and in the long term, this is still a bull market, because I still do think we're in a secular bull market, and after this correction, we would go through another bull cycle. So I'm not calling for a crazy stock market crash, and I'm not telling you to panic sell all of your long positions, because more often than not, you're much better off just holding your long positions through a correction and adding even more to them, rather than trying to perfectly time the top and bottom. So right now, I think this would be a normal, healthy correction, and I don't think you would need to panic sell your long positions, and I am definitely not panic selling my long positions. If we start to see something changing and we get this full-blown correction and we continue to head lower, now we're looking at a potential bear market, and then we might need to do things a little bit differently. But right now, it's not a bear market and it's not a full-blown correction until we break through critical support, and that is how I trade the stock market. I stay objective, and I know my critical levels, and I act accordingly, and I always have a plan. If you are in a volatile market and you fail to plan, you might as well just plan to fail. If you do not have a strategy and you have no idea what you're doing, you're just going with the direction of the wind, you are absolutely going to get whipsawed and absolutely wiped off the face of the earth in this volatile market. Now, also, don't rule out the possibility that this fifth wave is not yet over. I'm not saying this is going to happen, but it is possible that these bull markets expand, and we could still be going up for another 5 waves higher to finish out this fifth wave, and we could still see SPX all the way up about 5,000 before we see this fifth wave ending. I'm not telling you that won't or will happen, but I'm telling you it is possible. So right now, you have a possibility of breaking down through 4,500 and seeing the full-blown correction, or bouncing off 4,500 and going right back into another bull cycle that takes SPX to 4,800 or higher. So when you're flipping a coin and you don't know which direction you're going to go, that's why you need to watch the price action. I can't sit here and tell you we're definitely breaking below 4,500 or we're definitely bouncing off 4,500. Only watching the price action at that critical level will tell you what to expect. So I know I have this labeled as 5 waves currently, but nobody knows if this 5th wave is over with or if this 5th wave is going to end way up here. Remember, I still have price targets that I think we could still hit this year at 48.30 and 49.35. So don't be surprised if this 5th wave does indeed go all the way up into the 4900s or higher. It's possible unless we break through these critical supports. And also do note, we still have the bull trend on this weekly chart. Now, the other thing about the weekly chart is remember that every candlestick is one whole week. We can also flip this over to a monthly chart and see that we're also still in a very strong bull market. So on the monthly chart in the month of November, we did get a very concerning candlestick because we printed a new all-time high and closed at the low of the month. Typically speaking, that will be a reversal candle, and that could be telling us that we already saw the top and we're due for that correction. However, we won't know for sure that that is the real deal candlestick until we start closing below this low right around 45.35. Again, these are monthly candlesticks, so you won't know exactly what this candlestick is going to close at until the end of the year. So I don't really see how that's going to help you unless you're taking it day by day and week by week. Month by month is still an important chart, but as traders, it doesn't give us fast enough information to know how to make a decision. So go back over to the weekly chart, and my suggestion would be watch that 4,500 level and don't wait for a full-blown monthly candle. Just imagine that monthly candle closes below 45.35, but it closes all the way down there at 4,300. It didn't really help you out. So take it day by day and week by week and just be aware of the monthly chart, but I don't think it's really going to help you trade day to day. So to summarize this, I do think we're going higher. I do think this correction will be a buying opportunity, and the lower it goes, the more I would want to buy. The only concern is that if we came all the way back down here and we started closing below about 35.90, now that no longer looks like we're in a secular bull market, and it actually looks like we're going into a bear market. However, that's going to be a lot more downside price action because we still need to drop another 21% before we can say that we're in that bear market. By then, you've already had huge losses and it's already way too late to make a decision. So I don't necessarily expect us to go that low, but that's why I would instantly start getting more cautious as soon as we get below 4,500. When I say get more cautious, I mean have more cash available so that you can buy the dip at lower prices and be a lot more selective at where you're buying. If you're in a volatile market, you don't want to buy every 1 to 2% pullback. You're looking for those larger chunks like the 5 to 10% pullbacks before you start putting that cash to work. If you don't have patience in a volatile market, you will definitely regret buying way too soon because volatile markets can get out of control very quickly. Remember, the trend is your friend, and right now the trend is bullish. However, if the trend turns to bearish and you're getting overly bullish in a bear trend, that is not how you want to trade. Just like I always tell the bears, don't get overly bearish in a bull trend. If you get into a bear trend, you'll need to be a lot more cautious because that increases the probability the stock market can go out of control to the downside. Just like a lot of people were surprised in this bull market how high we continued to go, that is exactly why you want to stay in the direction of the trend, because you never know how high or how low something can go, but you do know if you're in the direction of the trend that the probability is on your side that you're going to get the direction correctly. So for the time being, the SPX is still in a bull trend, which tells us the bias in the direction of the price action is actually still to the upside. We'll know that changes if we lose critical support and we lose our bull trend, but we have to trade what we can currently see if we're staying objective, and currently we can see a higher low after a previous all-time high, and we're still very clearly in an uptrend above our support trend line. We still have the bull trend, and price action is still above critical support. So if we're staying objective, it still looks like we're in a secular bull market, and there's absolutely no reason to panic sell. That could change, but right now, that's what we see, and that's what we're going with. Jumping over to the bear bull survey, you can also see that we're getting way too much bearish sentiment. Remember, this is contrarian, and you usually want to inverse what you see the majority doing. So right now we see the majority at 42% bears and 31% neutral, and only 26.7% of the people are now bullish. So you can see down here in the historical view that we are now at the highest one-year bearish count at 42.4%. So basically this is telling us that everybody is panicking and expecting the stock market to either go through that full-blown correction or start to crash. When everybody is panic selling, that means there is a lot of cash on the sidelines or a lot of people trying to short this market, which does make it a lot harder for the market to continue to go lower. Remember, if you've been following me for any amount of time, I believe that the big money and the smart money decides what the stock market is going to do. And if every retailer is panic selling and trying to short the market, I don't believe the smart money is going to join in on that panic selling unless they have a really good reason to do so, which basically means you would need a black swan event. Smart money doesn't panic sell unless there is a very concerning event that is causing them to also think the stock market's going to crash. They will join the panic selling and they will start to sell as well. Right now, we really don't see that panic selling from the smart money. We see a very methodical, structured selling, and we've continued to see it across the board. So this selling eventually could reach a bottom and it will reverse very quickly. And I do think it's more likely going to reverse the more people we see getting bearish. So you can very clearly see from this weekly chart that the bears have been increasing week over week as the stock market drops a few percent. Remember, the S&P 500 is only down 5% from the highs. That is completely in the pullback territory. And I don't think that justifies 42% of the people being bearish and over 30% of the people being neutral. Of course, I tell you to get defensive, but defensive means you're going neutral, not that you're getting bearish. Don't get bearish in a bull market because you're going to have the wrong idea about what is more than likely going to happen. So while this doesn't guarantee that we have to go higher, this definitely increases the probability that we will go higher from here, because as I just showed you, we're above critical support, we still have a bull trend, and we're still above our support trend line, and now we can see that retail is panicking and getting bearish. That tells me we're more than likely ready to go higher, but we don't want to rule out the possibility of a black swan event. They're very rare, but you never want to completely rule out any scenarios. That's why you still need to watch those critical support levels, because if we start breaking below them, we are definitely going to continue to go lower. Jumping over to the NASDAQ 100 NDX weekly chart, we can see a very similar sign as the SPX, where it looks like we're very clearly completing a 5-wave advance. However, just like I said with the SPX, there's no guarantee this 5th wave is complete, so there's no guarantee that we have to go through the full-blown correction. This 5th wave can easily expand up here to my next price target at 17,683, and of course it can go even higher than that. So anytime you see somebody showing you Elliott wave and they're trying to tell you the stock market topped, don't believe them, because there's nobody that knows when the stock market topped for sure. These waves can always expand, and as long as you have a higher low, nobody that's using Elliott wave should be telling you the stock market topped, because they don't know what they're talking about. If you're making higher highs and higher lows, that means the Elliott waves are expanding, which means the bull market is expanding as well, and you still have a bull trend and you're still above critical support. Nobody should be calling a top when you're currently sitting at a higher low right after you just formed a higher high. That's reckless behavior, and it causes fear mongering, and it causes panic selling, and it causes people to sell their long positions in a secular bull market. I can guarantee you every single one of these highs that had a pullback, there was somebody saying that we topped and we're never going to a new all-time high for years to come, and we just continue to form new all-time high after new all-time high. So you can go with the panic selling crowd and the FUD crowd that constantly thinks the stock market topped and it can't go higher, or you can stay objective and follow price action and trend. I choose the latter, and right now you can see we're over critical support and we're still holding a bull trend. So there's no way I'm going to sit here and tell you that the stock market topped while we're still sitting above support and we're still holding a bull trend and we're still above our support trend line. So the SPX and the NDX are still looking bullish, and this still looks like a buying opportunity. It doesn't mean we can't break critical support and lose the bull trend in the future, but we're trading the chart that we can see and we're staying objective, and that's why we're still bullish. So on the NDX, we would need to start closing below about 15,488 and then break our support trend line, which means we could be coming back down to the weekly 50 EMA, which is down here right around 14,380. That would be another decline of about 9%, which would be the full-blown stock market correction. And yes, we could still go lower than that. Remember what I told you on the SPX, even though you're going in a downtrend, you're still going to get bounces along the way, and you're going to see a structure that looks like an ABC and possibly even a 5-wave structure lower, which tells us we more than likely are losing the bull trend. So don't rule out the possibility if we form a lower high that we're still in the stock market correction. And normally when you start getting into the scenario where you're bouncing off critical support, even the bears are getting bullish because they even know in the short term a bounce is due, and they're going to short cover, which is only going to help the stock market bounce harder. When everybody that's short selling starts to cover, they become net buyers, and they're out there with the buy the dip crowd, causing the buying to get even more accelerated, causing short squeezes, which could cause a very impulsive bounce. It doesn't always mean that we're going back on the bull, because it could be followed with more selling, but it does tell you the stock market could be bouncing in the near term. So this is why I always tell you to stay objective and follow price action, because if you're just guessing or you're just letting your emotions drive your decisions, more often than not, you are going to be on the wrong side of the trade. Follow price action and stay objective, and you'll have a very clear strategy on how to trade, and you'll know exactly what levels you're getting in at, and exactly what levels you're getting out at to take profit or getting out to take a loss. If you don't know when to get out to take a loss, then you should never enter that trade to begin with. So right now I tell you to remain cautious, but stay objective. And remaining cautious tells you, yes, we could have topped, but staying objective says, yes, we have not yet seen evidence that we did top. So being objective and being cautious are things that go hand in hand. And right now I would tell you to be objective and stay cautious, but objectively we are still bullish, but cautiously we're still concerned we could lose this critical support, and we don't want to have no cash available. When I say be cautious and be defensive, I'm telling you, you should have some cash piles you're sitting on, because without any cash, you have nothing to use to take advantage of a further dip. You don't want to just assume we bottomed and we're bouncing from here and be all in the market with no cash. And I would go the other way and say you don't want to have all cash where you're just assuming the market has to go lower, because if we start to bounce from here, you're not going to benefit from having a long position. Hold your long positions in a bull market and have cash when you're getting defensive. So don't rule out the possibility on the NDX that we bounce off this support and go make another lower high or higher high from here before we start to see what happens from there. Don't forget, it clearly looks like we could be completing 5 waves, which does mean we could be due for that full-blown correction. We're either going to get that correction this year or very early next year, because stock market corrections are completely normal in all bull markets, and we still haven't yet seen that stock market correction, which tells me that it is getting closer and closer by the day. So we're either going to be in that correction right now, or we're going to form another higher high or lower high and finish out that correction. But either way, we're staying objective and we're waiting until the price action tells us that it's here. On the Dow Jones, you can see that we are losing that critical support level, which was right around 35,200, and we're currently sitting above our support trend line. You can see that we are bouncing off of that support trend line, but if we lose that support trend line, we could definitely see the Dow Jones going into a bear market. So on the Dow Jones, from the high down all the way to the low, we did drop about 6.8%. So we are getting closer and closer to that full-blown correction percent. However, you can tell if we stay above that support trend line, we're not going to get the full-blown correction, and this is all just going to be a pullback. We lost the bull trend and we lost the critical support, so the Dow Jones is definitely looking a lot weaker than the S&P 500 and the NASDAQ 100. So you could say the Dow Jones is leading the way lower and we're about to see the full-blown correction, and the S&P 500 and the NASDAQ 100 are right behind. That's definitely something that could be possible, but wait for the breakdown below this critical support to know for sure. The critical support level is right around 34,200, and if we lose that level, we could be coming back down to our 50 EMA and possibly even lower. So if you're looking for reasons to get more cautious, look no further than the Dow Jones, which is losing the bull trend and losing critical support. However, we are still above our support trend line. You can see we've been consolidating sideways, so we're still in a full-blown correction through time. So there's no guarantee we have to see a big correction through price, because we've been chopping around and going sideways since May of this year. So watch that critical support level and look for the breakout back above about 35,200 to tell us that we could be going back into another bull cycle. On the Russell 2000, we see something very similar as the Dow Jones, closing back below our 20 simple moving average for the second week in a row and definitely losing our bullish trend. Now on the Russell 2000, we have our support trend line that is still holding up, which is right around 2140. If the Russell 2000 loses that support level, we're very likely going to see a bear market in the Russell 2000, and this is very likely just the first wave lower. So anytime you go into a bear market, you're looking for 5 waves lower, which even the bears at this point would start getting bullish because we're due for a bounce to finish out the second wave. Remember, there's certain times in the market when even the bears are getting bullish because they know we're due for a bounce. So if the bears are shorting the Russell 2000 and they're getting ready for a wave 2 bounce, they're going to short cover because they don't want to hold their short positions while the stock market is going higher. So more than likely, even if the Russell 2000 is going into a bear market, we're due for a bounce in the near term. That bounce could take us all the way up to our resistance trend line right around 2332, or possibly even just get rejected at our 20 simple moving average right around 2260. Either way, it looks like in the short term a bounce is due, and if you're looking for the bear market scenario, we'll get rejected at resistance and we'll come down for another wave lower, which will be another impulse, and then we'll finish out a full 5 waves lower. That is what a bear market in the Russell 2000 would look like, and that would tell us we're going through a much more prolonged period of weakness in the whole entire stock market, because you're not going to see the Russell 2000 going into a bear market while the rest of the stock market continues to climb higher. So that's why I tell you to watch that critical support level, because if we do start breaking down below it, that will signal a bear market in the Russell 2000. And remember, this support trend line is positively sloping, so the longer we stay above it, the higher that support level continues to become. So this is your bear market scenario for the Russell 2000, and you can definitely see there's a possibility that we're going to get a multi-week bounce, which could go hand in hand with the Santa Claus rally. If we get a breakout and we start going back into another bull cycle, then you're looking for the possibility that the correction is over in the Russell 2000 and we're going back into another bull cycle, which would take us in a 5-wave move higher back to new all-time highs. So right now you can see how critical this support level is, because it's going to define whether we go back into another bull cycle or break down and go into a full-blown bear market. There's no other scenario that the Russell 2000 could be in, because the Russell 2000 already had the full-blown correction. If I show you from the high down to the low, you can see the Russell 2000 corrected about 12.7%. So the Russell 2000 has already gone through a stock market correction. There's only one way you can look at it from here. It's going back into another bull cycle, or it's going through a full-blown bear market and it's going to drop 20% or more. There's really no other path right now, because we already had the full-blown correction and we're sitting right on top of critical support. So I think the most likely scenario for the Russell 2000 is a multi-week bounce to finish out a wave 2 in a bear market, or we're going to start forming a wave 1 of a bull market, and then it will be a buy the dip scenario for the next pullback before the next leg higher. So this is why you have to stay objective and follow price action, because nobody knows for sure exactly what's going to happen. I could see either scenario playing out, and I can guarantee you I will be prepared to trade either scenario. Whether it's a bear market or another bull cycle, I know exactly how to handle it because I'm watching the price action and I'm staying objective. That is what I'm trying to teach you to do as well. And if you learn how to stay objective, you will make money no matter what the stock market does. You won't care if it's a bull market or a bear market or a kangaroo market that just bounces around sideways, because you're going to know exactly how to trade it no matter which scenario plays out. If you have discipline and you have patience, you will always have the cash to take advantage of any scenario. So right now, the Russell 2000 is at a very critical level, and this is where you start making the big money, because you know these critical levels allow for very big bounces in either direction. And if you're trading with a solid plan, you should be capitalizing on these events. They come very few and far between, and when they do come, you should be ready to pounce, because they are great opportunities to make a lot of money. So watch this very critical support level and plan accordingly. Whether it breaks down or we bounce from here, you should know exactly how to trade the Russell 2000. Jumping over to the VIX weekly chart, you can see the VIX is definitely still looking very concerning, because we have the second week in a row closing above our breakout resistance trend line. Anytime the VIX is closing above a resistance trend line, and definitely closing above 26, you need to be very cautious of a very volatile and whipsaw market. Whipsaws work in both directions, where you're going to get volatile swings in the up direction and volatile swings in the down direction, and they're going to be absolutely littered with bear traps and bull traps alike. So when you see the VIX this elevated, prepare for a very volatile market. If you don't know how to trade volatility, you need to be a lot more defensive, and you need to have a lot more cash, and you need to consider a lot more day trading and positioning for the long term. You're either loading up on your long-term positions the farther we drop, but being methodical about the amount we're dropping before you go all in. You don't want to go all in on a 5% drop. If it's possible, we could drop 20%. So right now the VIX is telling us we could drop 20%, because the longer the VIX is staying above this breakout level, the more volatile the market's going to get, and the more likely we can continue to see full-blown panic selling. While I don't think this is a black swan, the VIX is always warning you of a potential black swan when you start to see these elevated levels. All I need to do is zoom out to the March 2020 crash, where you saw the same exact thing, and you saw how the panic selling just continued to escalate. I'm not saying that we're going to see a repeat of that, but these are the early warning signs that you see in that event. We saw the VIX getting elevated and staying elevated, and we never saw the VIX cooling down, which told us that fear just continued to pick up. And as you remember, the panic selling just continued to pick up as well. So watch the VIX, because we're not seeing it getting crushed back down below 26, and we're seeing this breakout look continuing to hold. So stay cautious. As long as the VIX is breaking out, we could see full-blown panic selling, and we could still see that full-blown correction that could turn into much worse. I'm not trying to scare you, because we're still holding up above critical support levels, but if we start breaking below those critical support levels and the VIX continues to spike, then you know you need to be a lot more cautious and a lot more defensive. So right now, watch that VIX level at 26, and we really need to see the VIX getting back below 20 to get back into a sustainable bull market. Jumping over to the Bitcoin weekly chart, you can see that Bitcoin is definitely breaking down through critical support. I told you that Bitcoin had to stay above 52,000, and we're currently trading right around 48,000. And you can see we did get a wave of selling that took us all the way down to the weekly 50 EMA. So this is the same scenario I told you could play out in the stock market. If we lose these critical support levels, we could be coming back down to the weekly 50 EMA. And that's exactly what we just saw Bitcoin doing over the weekend. So don't rule out the possibility the stock market is going to do something similar. This doesn't guarantee the stock market has to follow Bitcoin, So don't get it confused because they're not 100% correlated. It just tells us the sentiment is going risk off. There's clearly high volume selling in Bitcoin, which tells you there's people exiting Bitcoin or getting margin called because they were way too leveraged to the long side, even though we're in a volatile market. So be cautious when you see Bitcoin going risk off because it could be the sentiment of other markets as well. I'm not saying it's a guarantee. I'm just saying keep it in your back pocket as something to consider. So right now, Bitcoin is going to look extremely weak if it starts breaking back down below 39,000. Remember, it's already looking weak below 52,000, but that still means we could be forming another higher low if we stay above the weekly 50 EMA because the last higher low was right around 43,000. So by far the most critical support levels on Bitcoin right now will be right around 43,000 and 39,000. And if we start breaking below those, we're very likely going to see the bull market roll over and die. We still have the bull trend, but we lost critical support, which means we could lose the bull trend next. If Bitcoin loses critical support and loses the bull trend, don't be overly bullish on it anymore because no longer it has the bull trend, which means the trend is no longer your friend for the bullish direction. I did tell you I thought Bitcoin could get to 75,000 by the end of the year, but it's looking a lot less likely if we lose the bull trend. So the most bullish scenario we could see for Bitcoin is that it quickly gets back above 53,000 and maintains the bull trend as soon as Monday. If we lose the bull trend and we can't get back over that critical level at 53K, don't get bullish on that price target at 75,000. I only give you new all-time high price targets if we're in a bull trend, and if we lose the bull trend, you should not be looking at Bitcoin's prices to be all the way up in the 70,000s anymore. So for the time being, don't rule out the possibility that this thing is rolling over and getting ready to die, so watch those critical levels at 43,000 and 39,000. If we can get back over 53,000, we're looking a lot more bullish, and we still need that breakout back above 60,000 to get back on the bull for that price target at 75,000. Just a quick update on the ARKK ETF is we did have this long-term consolidation wedge, and I told you we were getting ready to know which direction ARKK was going to break out. And 2 weeks ago, we did break out to the downside, and you can see the confirmation of follow through with that price action. So just like I told you, whether we break out to the upside or the downside, it's going to dictate the direction of ARKK, and you can clearly see that was correct. We broke down through the support level, and we see a full-blown flush. So now we're looking for a full-blown crash or correction in the ARK ETF, and possibly even a capitulation. At this point, with the price action closing way below the weekly Bollinger Band, this definitely looks like capitulation, so watch that critical support level at $90. Below that, we're going through a full-blown bear market. Otherwise, we did hit capitulation and we're getting ready to bounce from here, which means we could see a very impulsive bounce back up to the weekly 50 EMA. So jumping back over to the S&P 500, there is definitely a million reasons to be defensive and be cautious in the stock market. We're seeing the VIX at elevated levels, and we're seeing Bitcoin possibly rolling over, and we could be seeing the same thing in the stock market coming up this week. So stay cautious and stay defensive and make sure you have plenty of cash. But I don't necessarily suggest just panic selling all of your long positions. For me personally, I know my long positions are way out there and I'm not needing that money anytime soon, and I'm willing to hold them through a stock market correction and only continue to add to them. That is how I handle my long positions. Feel free to do whatever you want and whatever makes you comfortable, but I just don't believe in panic selling while we're still in a bull market. I do think this is a secular bull market, and I do think a stock market correction is a buying opportunity to continue to add to your long positions. If we go through a full-blown correction and continue to crash, we're only going to get better and better buying opportunities as long as your outlook is long-term. If you don't have a long-term outlook, you should not be risking money you can't afford to lose, so don't be risking money that you need to buy food or pay your rent. That's just reckless and gambling, and it makes no sense to do that, so be very disciplined and very patient and let the price action do all the talking. Also remember that I have bank trade alerts, which does extremely well in all market conditions and exceptionally well in markets like we're currently in. I still have that Black Friday deal for 67% off your first month, so now is really the best time to be a bank member. Bank is algorithm-driven alert service that sends all of your buy and sell alerts directly via email and text message and only trades the ETF TQQQ. If you're interested in joining Bank Trade Alerts and claiming that Black Friday discount deal for 67% off your first month, you can find out all the details how to join by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.